Traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another candlestick chart analysis, and I will prepare to do a put here because we have here this kind of hammer. Yes, and I'm doing a put now because I'm pretty much sure that we are heading down because we have here a Bollinger Squeeze, and now we are going into a breakout, and that's the reason why I'm doing here a put, because I waited to get a better entry point, and I'm pretty much sure that this candlestick here will shoot up, will shoot down, yes, really far down, yes, because we are here in a downtrend, and that is what I'm explaining you all the time when I'm explaining you how to trade those kind of trading setups. All those my trades are based on those things which I have explained in my ebook. So get this ebook, it's for free. You find the link in the description, and in this ebook you'll find all the most important candlestick pattern, chart pattern, and binary option turbo trading concepts. Yes, like market condition, trend identification, rejection, candlestick math, and in my opinion the most important is this one about the rejection, where I explain you how to trade, how to choose the best trading setup, and those ones are based on the trend, on the key level, on the candlestick pattern, and on the rejection. Yes, I cannot repeat it often enough. Yes, but if you have understanding of the trend, of the key level, and of the rejection, you do almost good trades. Yes, you see here I have checked out those things. Yes, because after this Bollinger Squeeze, I was expecting that there will be a breakout, and this breakout will mostly be a strong trend, and that is the reason why I did here a continuation of the trend trade. So let me see if I can show you other trading setups which I would have done here and which I have done. So let me see here, for example, this was this trade what I have done, yes, in the beginning of this downtrend, yes, but you could do also this kind of trade here, because after the squeeze and after you see that we are all the time in a downtrend, you could do this kind of trade here because it was a long downtrend here. So let me see. Here you see here would be a trap. That is why you have to check the running candle. Yes, you see the downtrend was so strong that this engulfing candle doesn't work out. Instead, there was here a consolidation area, and that is the area where I would not do any call or any put. Here I would not trade. Yes, maybe I would trade this kind of flat breakout. Yes, this kind of flat breakout of this box. Yes, but mostly, or this one here, yes, on the 20 EMA, that could be done as a few trades. Yes, but you see consolidation area here. Yes, consolidation area here, this is bad. Yes, and I would not trade such kind of consolidation areas because you don't know where price will go, and if you don't know where price will go, who was not, or if the market doesn't know where to go, how you want to know where it goes. Yes, but here after it got to this breakout, after this Bollinger Squeeze, yes, here the squeeze here, you see the consolidation area is over, and we are going into a trend. And I put it here in this kind of scenario because I was pretty much sure that price will go down further, because the trend was down. You see here the EMAs 200, 150 at 20, yes, are hitting all down, yes. So that was something like a sure shot, yes. I was gone with the trend. The major key level is the Bollinger Band. You see here below the Bollinger Band, the candlestick pattern was this kind of hammer, bearish hammer, and then I waited to get above this level, and then I entered into trade because I was pretty much sure that price will go down further. So let me see if I can show you some more trading setups which I would do. So here we have some kind of things which I would try to avoid. For example, here you see we have here the 200 EMA is flat, and so market is here ranging around the 200 EMA, what I have explained to you so often, and so I would try to avoid any kind of trades, but I would trade like I have explained. If you have a ranging area around some kind of EMA, you can try to trade those kind of trading setups here at the edge of the Bollinger Bands, yes, that are almost good in ranging markets, and when the Bollinger Band, when the EMAs are flat, because that is an area where you are less risky. Here in between, like I have explained so often, here in between it's dangerous, yes, because here EMAs are crossing and you don't understand what will happen, yes. And also this one here I would not trade, and that are those things which you cannot see if you don't have the EMAs on the chart, yes. If you don't have the Bollinger Band, or if you don't have the EMAs on the chart, you don't see those kind of critical areas here, yes. So these are critical areas you have to be carefully. Mostly this kind of trade could be done here after you have understood that the 200 EMA will be a strong resistance. You can use them, yes, but I would try to avoid such kind of trades because, like I told you, here in this area you don't know which kind of EMA will act as support and resistance and which one not. That is like gambling. And why doing trades in this kind of dangerous area if you can choose also more safer area, like this one here, for example, yes, this one here, this trade was a nice one, yes. Here you understood price touched the Bollinger Band, yes, it's almost flat. So price touched the Bollinger Band, and then you got another rejection, and then you could enter into this trade because you know after this downtrend it will go up, yes. And the same is here. You got here a nice support area, and you could trade this kind of candlestick and this kind of candlestick, yes. And if you are someone who are really okay, I would not do this Marubozu candlestick here because we were too close to the one deviation and the downtrend was active. Yes, you see it's all down still. Yes, also if the 200 EMA is flat, yes, everything else was hitting down, so it would be not so nice trade. So but you could do here in this kind of scenario, when you understand that we are in a downtrend, this kind of trade here after this engulfing candle here, yes. So the one deviation is the key level, yes, and this candlestick would be a red one then, yes, because we are in a downtrend and you can trade this then easily. So, and then that was this one here on this chart, and you see here, this kind of candlestick will not be an evening star. And why it's not an evening star? Because we have here the 100 and the 200 EMA. That is when I'm talking to you. If you are having crossing of EMAs, be carefully. Yes, crossing of EMAs is still carefully, and almost carefully if the highest EMAs are crossing here, 250. Yes, if you see something like this, or the here the 20, the 50, and the 200, and so and the 100 too. That is really risky because you see how fast the trend will change. Yes, and but here you could do this kind of trade here after this engulfing candle at the edge. Because it's flat, you can trade at the edge this kind of candle. So let me see if I can show you some more. So here in this kind of chart, yes, and that is what you have to do too. Yes, you have to get your past chart, the past chart, and spotting those kind of setups here. Look at this. Here we have this kind of candle to trade, this kind of candle to trade, yes, and that was it already. Here you see an inverted bearish hammer. An inverted bearish hammer is not always a continuation pattern, yes. Here it would be the 20 EMA pullback, and that would be a clear call, yes. Here at this level, you should be aware. You should be aware if price will break through this or not. And we have here also a round number. Yes, so you have to be aware and you have to do a call here. Yes, because you know after an uptrend, price got back, tries to get below the 20, but the 20 EMA is a pullback. That is this scenario which I'm talking to you when I'm going to talk about Forex. We are doing then those kind of trades in the higher time frame, on the 1 hour, 4 hour time frame. Yes, and that are then really lucrative trades. So let me see here. I would not do any kind of trades. It's looking really bad because you see we got the pullback and then we got another pullback here. Yes, but that was then the triple bottom here, yes, which I have explained in the last video. So I think we have here discussed everything here again. this kind of trade would be nice, yes, after this morning star and this inverted bullish hammer. And then I would say that, and this here after this hammer, and you see this kind of hammers I'm doing always trading those here too. This I would trade too after this hammer. That are my favorite ones. It's in a downtrend. A bearish hammer is always a nice continuation pattern, yes, and also at reversal points too. So then there would be probably also this kind of trade here at the 1 deviation Bollinger Band. Yes, and that's all this. So I would say that would be enough. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, let me know some comments in the comment section or join the Facebook group. Don't miss this opportunity. So I would say stay safe and bye-bye.